Hey guys, welcome back. In today's video, we are talking about shorts trying to delist AMC, apes becoming millionaires, the imminent breakout, and many more in this video. I first want to talk about this that happened yesterday. So AMC, you can see on time and sales at 359.59, it was at 1.01. And then 3 seconds after the market closes, it goes to 0.98. And on every broker exchange, it showed AMC at 0.98. Now, to a lot of people, this obviously seems weird because this is something that happened after hours. It shouldn't tell where the price of AMC is. But what we have to understand is that this is actually a very normal thing to happen. It happens for pretty much every single ticker. So the very fact that the price was determined by an action that was done after the hours, that is something that's very normal. What needs to be talked about is why the shorts feel the need to actually do this, because you can see this massive order that came in and the reason for why they're trying to actually bring it to 0.98. Once again, this action is something we've seen almost every ticker. It's just more significant when it comes to AMC because of what they're trying to do. Firstly, we have to remember this. So this is from a while back, what Mark Cuban put on Reddit. And what he ultimately said was the goals of the short sellers, which was their goal is to never cover their short, but that would take the company going out of business or being delisted. And this is what we've always said as well. The only way for the short sellers to win, for them to never have to cover their short, is if they can bankrupt AMC or delist AMC. And so this is why they're trying to do this, because you have to realize here is that if we see a company that gets a deficiency notice and its stock closes below $1 for 30 consecutive business days, we can see AMC getting delisted. And this is what they're trying to do. Now, bear in mind is that if we go above $1, if we are seeing AMC, so you can see the first 9 days don't count, it gets reset immediately. And so that's why they're worried. And that's why they constantly feel the need to stop AMC from closing. And it's very important here, closing above $1. And so going back to what we saw here, the interaction, the mechanism behind this is something that happens. But the fact that they're trying to do this is because they want to delist AMC. They want to make sure that they don't ever have to cover the billions of synthetics that they have created. And so that's what we're looking at right now. Some of the questions we should really be asking as well is volume seems to be picking up with AMC, yet we're still barcoded at $1 a share. The pressure must be through the roof. So the off-exchange recently has been going crazy for AMC. And you can see other various factors about this as well, because yesterday, again, this is the day of where AMC closed just at 0.98, despite the fact during market hours is at 1.01, is that we actually finished the day with a 0% change. So if you take a look at the volume that was yesterday and the day before, you can see extreme volume. Yet we are still seeing 0% movement, or at least for the last, for yesterday, for the 31st of March. Today, we actually closed at 102, so above $1. So already resetting that, already putting the short sellers to shame. But what we have to understand is that currently so much volume is happening for AMC. And we are seeing how this is stressing out the short sellers. We're seeing how their liquidity system is obviously facing distress, and they're trying everything they can to prevent any further movement. Is why you can see 23.73 million, and yet we had a 0% price change. If you take a look at what we were saying with the off exchange, 91.47. So at one point today, what we saw was 91.47, 5.6 million shares into the off exchange, 181,000 that hit the NYSE. So if you want to talk about how crazy this is, if you want to see the attempt to prevent AMC from going up any higher, this is what we're looking at right now, 91.47 off exchange being used. And so this is obviously something that's insane. And the reason why they do this is because they know that at any moment, should they let AMC run freely, it will obviously go up into the hundreds, into the thousands. And that's why they're trying to stop this. We've already seen in the past before how AMC can easily go up 50, 60% in a day. And we will also see how AMC can be met with halts. And so all of this is just pointing to one thing. Shorts can't handle it when AMC has a rapid movement. And we're not just talking about AMC going to the hundreds and they can't handle it. We're talking about at any time, even at the current state, Should AMC see a day where it goes up 30, 40, 50%, that would already put extreme stress because they have to put so much short shares of AMC every single day. Bear in mind, AMC going up 30% right now will only put AMC at 135, but yet that would still have extreme stress. And we were at this price just a couple months ago, 2 months ago. And so this is how we know that this whole synthetic situation is getting out of hand. How we know that they have created so much synthetics that they can't even handle it anymore. And even the slightest percentage movement is having major effects. And so they're trying to prevent any major movements because they understand AMC can run the moment it is not being suppressed, the moment it's not being manipulated. We can also see here, borrow 2.8 million shares, return 1.1 with a net with 1.7 million, 160,000 volume as of 8:50 a.m. They always seem to be borrowing 10 times the current volume. And this is already a big show of what's going on. And once again, a big show of the synthetics that are being created, because it's very likely that what we see that are being returned are the synthetic shares being created. And the fact that we are seeing 10 times that volume, it could very likely be that every single day, the volume that we are looking at, if we go with the normal 7-to-3 ratio of inflow to outflow, meaning that 30% of that volume is selling, it's very likely that all 30% of that volume are synthetics being created because of what's actually going on. Because it looks like that the selling pressure that's in the market right now are not actually because of people selling, but rather because shorts are creating synthetics to actually suppress the market. And so it looks like that's what they're doing. And this is why we said that synthetic position has gotten out of hand, and any slight movement is going to corrupt them. And that's why they need to use a 91% on AMC. A big thing, when recession hits, we become millionaires/billionaires. And this is why they are worried. This is why everyone's trying to get their hand on AMC. We've already talked about why institutions, why the safe haven investors want AMC. But a big thing we have to understand as well is how other people are now starting to realize the opportunity. Apes like you and me have done everything we can to obviously expose what's happening within the industry. More and more people are realizing what's going on in the market right now. More and more people are realizing the manipulation, the corruption that's happened to AMC, that has happened to GME. And so this is why they're trying to get their hands on AMC. And we know that there is no shares left in the float anymore. But we have to understand is that when all of these things come to an end, when AMC and GME squeezes, we are obviously going to be laughing at the very end. If we take a look at this as well, the theater index peaking over breakout line today. This started the AMC 2021 squeeze. There is no way this doesn't break out in next day or two and absolutely send AMC. Now, I don't want to excite everyone with a particular date, but what we have to objectively understand is just how volume is coming in for the industry, volume is coming in for AMC. We've already talked about this before. The film industry, the movie industry, the theater industry is a very good industry, especially right now. And many people are trying to invest within this industry. When you deep dive into the industry and you try and find the best investment, the best potential, AMC is the one that shines. It's why we see so much volume coming in. Now, again, I'm not trying to give a day, but because we're seeing more and more volume coming in, we could be seeing a massive breakout for AMC. This paired up with understanding that they're trying to obviously use, all of this, where we see 0% price change, where we see 91% dark pool for AMC, it starts to make sense that people are eyeing this up. It starts to make sense that these are all lining up to happen. Another thing that you have to prepare is your mentally preparation, because when AMC runs, it's going to see extreme volatility. We can easily see AMC go to $40, then down to $5, then to $60, to $100, to $3, to $200. This is something that could easily happen because they want to shake people out at low prices. Remember, short sellers will not want to buy any shares of AMC and cover any shares of AMC at $100. They obviously want to do it at a lower price. And so if they can make people panic, if they can make people believe that when AMC goes to $100 and it goes back down to $3 and make people think that they've missed out on the opportunity and then they start selling, that's what they will try to do. But what we have to understand as well, again, none of this is ever financial advice, so do take our Instagram so much, do your own due diligence and research. But what we have seen in the past before is how if we don't do anything and they can't actually buy any shares at $3, they will eventually have to offer us a higher price. It's how we saw AMC go up that high in the first place in the past. You can see here, I believe every share of AMC traded since March 2021 has been a fake. Many billions, and they are buried in deep in swaps. And so this is the things that we are looking at right now, and is something that we have always said as well, how many synthetics of AMC has been created, how the whole market is going, and this is just understanding of it. And so it's why I said earlier, it looks like the sell volume every single day is actually synthetic volume, and the synthetic volume will be times 10 of what's actually going on, and that's how many synthetics have been created. And so if you do that and you times that by the last 5 years, you get billions, tens, if not hundreds of billions, potentially even in the trillions of synthetics that have been created for AMC. And when we talk about all of those being covered, you can imagine how much money will have to be spent. If we take a look at the macro aspect and talk about why people want to buy into AMC, why people are investing into the industry, firstly, theater industry, we talked about how it's recession proof. But secondly, we're seeing the growth of theater industry. Firstly, we already had Project Hail Mary, which is the highest grossing movie of 2026 so far. But Adam Aaron has talked about how the Super Mario Galaxy movie, which is opening, is going to be something that does even better. So one thing I want to say is that if you guys are interested in this movie, make sure you go watch it. This is something that I will be watching as well. I do think it's very interesting, but you can see how there are so many movies coming out this year that are going to do extremely well for AMC. If we take a look at the comparison, Cinemark doesn't have a single almost full showing, where AMC has plenty of almost full showings. And this is how we know that people are choosing AMC over Cinemark. Now, we already know that is the case. We know that they have a strong foundation. And it's why we've always said that the price reflection, the price comparison between the two just doesn't make sense. How can Cinemark always have green days, but AMC red, despite the fact we're doing fundamentally better than them? And so this is just another example of how well we're beating them. And this is also another example why people realizes that AMC is most likely, if not the best investment opportunity right now, and especially within the industry. And that's what people are trying to obviously go for. If we take a look at the Q1 box office, we've done exceptionally well. We're only 6 million away to be the best Q1. Now, Tuesday numbers are normally 11 to 15 million, so potentially we can actually beat that. It is going to be interesting to see it, but either way, we have to know, even if the box office were to be the same. So if we were to see the same number, 1.722 billion, you have to understand AMC is in a much efficient state in 2026 than it was in 2023. So we are still able to make more revenue, make more money. So that's the ultimate thing that we have to understand here. Now, what do we want for AMC? Why do we care about the macro about AMC? Why do we care about the fundamentals? It's because if AMC was in a position where it can do buybacks, which reduces the float, in that scenario, when the dividend is announced, the shorts will know it's unsustainable. That's when they will start running to the hills and try and be the first one to get out. For those of you who don't know, this is something we've said. When a company offers a dividend, the short sellers actually is responsible for paying that first. And then once all of the shortest shares has been paid, then the company pays the rest of the dividends. Now, with short sellers and what we've just talked about, if they created tens of billions of synthetics, hundreds of billions of synthetics, then even if AMC were to issue a 0.1 cent or $0.1 dividend, that is still going to have massive effects. Because if there was 10 billion synthetic shares that's being issued out, then short sellers will still have to pay $1 billion in dividends. And this is something that is obviously going to be consecutive, that's going to be consistent. So short sellers may be able to hold within it for a month, a quarter, depending on the dividend rate, the dividend time. But eventually this will stack up. And if they choose to create more synthetics during that time, then the dividend payment is only going to get higher. So you can understand how if AMC was to be in a position to offer dividends, it would put immense pressure on the short sellers. Another thing is that yesterday we saw 76% on GME as well for dark pool. Now there's a big reason for this of why I think this was happening. It's because firstly, they want to prevent the buy orders. They want to prevent the bullish pressure. But why do they want to do this? It's because right afterwards, GameStop has actually announced their acquisition, which is Bed Bath and Beyond. So this was the acquisition that they are making. Now, is this going to be the only acquisition that's being made? No idea. But this is what they are doing. And so it looks like some people may have gotten wind of that. Some people wanted to buy into GME, but they wanted to prevent that movement because they've realized that this could actually be a massive, massive play. On top of this, we're seeing the GameStop coin go to $278 trillion. Now, once again, I have no idea what is going on with this coin. No one has any understanding of what is actually happening. Some people talked about how it could be due with the naked shorts of GME. Again, no one has any actual clear confirmation of what's going on. If you have any clues, if you have any idea, make sure you comment down below, let us know. But the very fact that we are seeing how recently GME has been doing major things, we talked about the acquisitions, we talked about all the options, suddenly we're seeing this GameStop coin going crazy. It just looks like they're trying to naked short GME even more. Another big thing is some people are making a correlation between GME of GME short volume going jumping above 65% to when Bank of Canada lending billions in emergency overnight. Now, once again, there isn't any direct relationship that you can confirm here, but what we have seen in the past before is how plenty of times, whenever something to do with GME or AMC happens, you see major events that happens with these financial institutions. When we saw AMC run, we saw many brokers suddenly having data and technical problems. When we see GME runs, we're suddenly seeing how market makers, how hedge funds are facing liquidity issues. And so it just looks like that a lot of the money are being used to actually directly attack AMC and GME. Another big thing is what we are seeing is that Warren Buffett once said the banking system is showing signs of fragility. And we saw that he recently sold Bank of America stock, which was the main broker for Citadel's derivatives. Once again, you can see that people, this is what we've already said, people are preparing for what's about to happen. Citadel, shorting AMC, shorting GME, creating synthetics of AMC and of GME. Bank of America is the ones who obviously are the prime brokers, the prime lenders. And so if something were to happen to Citadel, Bank of America will also take a massive, massive hit. And it just looks like people are realizing this right now. It looks like people are realizing that potentially they have a very sour position and people are trying to stop their exposure to Bank of America because that will also stop their exposure to the sour positions, the toxic AMC, the toxic GME swaps. And this is what we are seeing. Another big thing is currently we're seeing the silver market ripping. We're seeing the metal market. Again, volatility is going to continue on this. It's only going to go higher because of what's going on in the world right now. And ultimately, that's going to be good for us because of our HYMC investment. And then finally, it looks like there was some correlation between the Wall Street and SEC, between the naked short selling of MMTLP. Now, are we surprised by this? Not really. But now this is how we know that regulations are helping with the market makers and why we ultimately need to do something ourselves to beat these guys for the AMC to squeeze. Again, none of this is financial advice, and I'll catch you guys next time.